Hey everybody, it's Paul here. It's day 19 of my 30-day challenge. We're finally, over halfway there, and I'm starting to see the end in sight. But anyways, guys, I had one of my viewers ask me to do some more US listed ETFs. So I've taken a look at my portfolio and picked out one of them that I really like. And so today we're going to talk about AIPI from Rex. I call them Rex shares, but when you Google their website, it just says Rex. But anyways, let's take a quick look at their website and see what it's all about. All right, guys. So here we are on the AIPI Rex AI Equity Premium Income ETF website. You can see that this ETF has a distribution rate of 34.8%. So they target a 35% distribution rate. So what that means for anybody who doesn't understand, if you buy this ETF at say $35, it's gonna pay you, right, a 35% distribution rate based on the current ETF price, right? So if the price drops down to $30, it's going to pay you a 35% yield on the $30, not on your 35%, or sorry, not on your $35 average cost. Now, if it shoots up to $40 a share, then you're going to get more than a 35% yield because your average cost is lower. So it all depends on what you pay, but they're going to pay a 35% yield or distribution rate based on the current price. So the objective here is to own AI stocks. We all know AI is a very hot topic these days. Some people think it's very overvalued and there could be a crash, which is, of course, always possible. They write covered calls, and that this equals enhanced income potential. So basically, we're trying to make money on a monthly basis from AI stocks. So you can see this is listed on the NASDAQ. The fund inception was June 4th, 2024. So it's been out for a little bit more than a year now. Let's see here. So the assets under management, 375 million. It's not a bad sized ETF. It's not huge, but it's not bad. The current NAV is 41.95. Closing price was 41.98. We've had quite a few red days recently, so the share price has come down a bit. You can see here it says that it holds 95 holdings, and the expense ratio is 65.65. We'll take a quick look. You can see the distributions on a monthly basis. See, they fluctuate based on the share price, right? So last one was $1.30, $1.24, $1.23, $1.27, and so on, right? Back here, you can see it was a little bit higher when the share price was higher, right? $1.44, $1.48, $1.51. So you do have to expect volatility in your share distributions with this ETF. So if you want something that pays the exact same amount every single month, then this is definitely not the fund for you. Just so you know that this is holding the BITA AI Leaders Select Index. It's a rules-based composite index that tracks the market performance of companies listed on recognized exchanges based in the US that are at the forefront of AI technologies. The index is rebalanced monthly and reconstituted quarterly. So we're just going to take a look at the top 10 here. You got CrowdStrike Holdings, NVIDIA, Palantir, Datadog, ARM Holdings, Advanced Micro Devices, Micron Technology, Alphabet, Cisco, and then it holds some cash and treasury bills. Now, some of these you might be more familiar with, like NVIDIA and Palantir. Some of them I'm not as familiar with, like, for example, Datadog. But, we're leaving it into the fund manager's hands to pick the leading companies that should be in these funds. All right, let's go down here. You can see it shows some returns, 1 month, 3 months, right? 6 month, 24.55%, year to date, 11.8%. 1 year is 20.56%, and since inception is 21.33%, which is pretty good. According to this, it's beating the S&P 500 index by a little bit. Now, I just pulled something up to let you know exactly what it is they're doing. So AIPI holds a basket, as we already read, of the AI-focused stocks from the BITA AI Leaders Select Index. So what it does is it writes call options on much or possibly all of those holdings. So according to the prospectus, Rex aims to write calls on 100% of its holdings. Now, personally, I think that's a little bit too aggressive, and that's sometimes why you don't see the share price appreciation as much as you might with other ETFs. And they tend to write slightly out of the money call options. So it means the strike price is above the current stock price, giving some room for stock appreciation, but capping some upside. I'm going to share with you guys my Wealthsimple. I always like to show what I hold personally so that you guys can see I'm trying to be, open and honest and transparent with everybody. You can see the 5-year is down 17%. I personally hold 200 shares. I used to have just over 100, but I sold my FEPI position because FEPI was up more than AIPI, but it targets a 25% distribution. So the monthly distributions were closer to $1 as opposed to AIPI, where the distributions are closer to $1.30. So I decided to sell those, put all of the money into here. So now I have 200 shares, and you can see I'm currently down 12.43. But remember, guys, this does not take into consideration distributions. And you can see, right, I get $260. This is what I bought when I sold my FEPI position. Here's another dividend, 137, 135, 139. So obviously it's gone up after I added in the new shares. Now, if you don't like AIPI, you feel like maybe it's too aggressive with their 100% coverage or 100%, they're using 100% of the portfolio for their options. You can consider some other ones. Yield Max has their AI and tech portfolio option income called GPTY. So what I would do is do some research and find out how this runs differently. Global X has AIQ, so it's their artificial intelligence and technology ETF. They have a few different ETFs. Some of them are AI and robots. So you can take a look at their suite of ETFs that include artificial intelligence. There is also chat. There's also chat. You can get this one, generative AI and technology ETF. So you do have options. So that's the ETF that I have that I wanted to talk to you about today is AIPI. I really like it. Now, what I would suggest, especially in such a volatile market that we have right now, is if you want to buy AIPI, maybe buy like 5 or 10 shares a week, right? If you go in big, like I think I did at the beginning, right? You go in big, you buy 100 shares or something at say $50. Now you see the share price is at 41. So I'm down $9, okay, for example. If you go in and buy 10 shares maybe a week, okay, and just average, dollar cost average. So that way your average cost will be closer to what the current price is, and you'll get that 35% distribution, the 35% yield. All right, guys, so that's just one way that I like to do things. I mean, I've done it both ways where I've gone in big and bought a lot, or I've built a position slowly. So it's up to you. It's options that you have available to you. And then, of course, if you do decide to go in and buy 100, 200, 300, 1,000 shares, then you have the question of, do you want a drip? Do you want to buy more with your monthly dividends, or do you want to use those distributions, the dividends, and buy another ETF, right? Maybe you decide you wanted to put money into WPay. So you take all the distributions from AIPI and buy WPay. For example, right now I'm trying to increase my position in TDAC. So I'm taking dividends from AIPI and I'm building a position in TDAC. So instead of having one income stream, I'm going to have 2 income streams, and I'm going to diversify my portfolio that way. All right, guys. So just remember, this is not financial advice. Please take a look at all the ETFs that I suggested. See if any one of them fits your portfolio. As this is very sector specific in technology towards AI, I wouldn't make it your entire portfolio. I wouldn't make it a huge position. Just make it a small position that adds a little bit of extra monthly income to your portfolio. All right, guys. So until tomorrow, bye for now.